Right. Welcome. So we are back with another live training session. This time the New York close. So today, um, the Americans are back at it. Nice volume. Seeing some decent movement. Just bear with me. Let me get some of this links just over quickly. But yeah, seeing some very nice movement in the market. Okay. In terms of crypto, seeing a bit of a slowdown. Okay. So the turnaround should come in the next few days, hopefully. Um, it's a bit of a strange one, especially kind of trying to forecast where prices are going to next, really. Um, yeah, we've got obviously the interest rate decision coming in on the 1st of February. So obviously there's a little bit of buffering time between now and then. But ultimately, a 25 basis point in the market, has it been priced in on this move up? That's the question as we edge closer towards that interest rate decision. Just because that's a likely interest rate figure that we will get. Okay, so 25 basis point. So does look like it's been priced in. Okay, I mean it's a huge push coming off the back end of the interest rate CPI, weaker CPI figure. Let me just have a little look. What date exactly we got CPI? It was on economic calendar. US CPI on the 12th. Okay, so yeah, so literally we got CPI somewhere around here just before this huge push. So yeah, probably seeing that 25 basis point priced in. Now, if Jerome Powell decides to come in at that 50, which I mean, who knows what could happen. That will be a good sign for things to come back down. But yeah, I mean, there's different ways, different points of perspective that you can be looking at it from. It's the first 25 basis point after the huge rate hikes that we've had. Okay, so obviously that decrease to the first 25 basis point is going to be bullish, so we should see a push up. Just depends on whether the markets are seeing it as more bullish than what it actually is. So it could give us another huge pump, or it could already be majorly priced in, where we see a smaller push up to resistance, and then we kind of run out of buy side liquidity, and then we kind of come down for a deeper retrace in search for more liquidity for a potential continuation. Now that is what we're expecting, just because this move is so overextended. I mean, it's a 30% move from this bottom to current top. So yeah, could be the case that we see a little bit of a turnaround, hold this level, then go for another push up. Something almost like this where it kind of just fluctuates but moving in an upward fashion, and then as we kind of get that interest rate, maybe see a push, and then a pullback. So yeah, should be looking at some structure being built up. I mean, especially after this kind of place where it is now. I mean, kind of almost lagging, consolidating, moving down, and we're seeing nice push kind of up, but we are starting to see these signs of supply starting to spike up and buy side declining as well. So yeah, the signs of a potential turnaround are starting to show up again. But the that interest rate decision is looking like it's going to be bullish for the markets. So, question now is, so obviously we got this fake out that we did talk about in the Discord, and the live trading session from this morning came straight back into structure. Okay, but it was quite a shallow pullback. So now we're seeing a push back up, building up again. So it could be that we get another fake out just above this level, or we actually just push up straight to that level of resistance that we've got on the chart. Okay, so that's kind of where we're looking for the top to potentially be forming. Now, yeah, ideally we want that interest rate decision, so we want the pump that we potentially will be getting on that interest rate decision to be, well, to happen really, and then we can start thinking and looking at a deeper pullback. Whilst we're still behind or still waiting this next interest rate decision, obviously it's kind of more inclined to see a push higher in prices. So yeah, ideally, what would be nice is a breakout lower in the next week, hopefully, and then on the week of interest rates, we start seeing accumulation again. Get that interest rate, it makes that. So the 25 basis point quite bullish. We get the Fed speech, all of that sort of stuff, and then we get that push up happening. So we get the breakout on that interest rate, and then we make that nice final last push towards this level of resistance, and then we can start looking at a deeper pullback. So there's a few different options that we can be looking at, and yeah, they're going to be, yeah. I mean, as time kind of moves closer, and wherever price is, as we do get closer towards that interest rate decision, is kind of going to show us a little bit of light, as and then kind of in terms of looking for specific targets. Yeah, at the moment, obviously, we're coming off the back end off a huge push up in prices. So there's still going to be retail traders that are wanting to, got in late, okay, and they're expecting larger profits. So yeah, probably looking at a little bit more of an increase. But this price action here, I mean, is showing lots of slowing down in buy side. This is an opportunity for institutions to start switching up and taking some profits. Yeah, lots of distribution as well, lots and lots of distribution. So yeah, we're starting to see a little bit of a turnaround in sentiment. Yeah. Right, let me get this on. Right, so we're about 30 minutes away from that New York close. Yeah, I mean, this morning we pulled in a very nice oil trade. Very nice indeed. So, and we actually pulled in some nice crypto trades as well, actually. So today's been a good day, a very good day. much have we managed to do today? Today. Duh, 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 duh. Yeah, so not too bad. 260 for the day. Yeah, not too bad. 260. 110 for the day. Sorry, we made one loss. So yeah, not too bad. Let's see what we can get. Yeah, hopefully we can get some volume pumping in um, on this final half hour. That would be lovely. Got oil absolutely flying again. Um, it's going to be interesting. Copper and flew as well. A lot of the commodities have absolutely skyrocketed. Um, so don't know why. Well, what do you mean you don't know why? Exactly why. See if we can get anything in the pipeline for a potential quick scout today. AAV. Unfortunately, we've got out too soon on this one, but this one absolutely popped. Caught some nice profit on it, but Jesus Christ, did we miss out on quite a lot. Um, yeah, what a trade. What a beautiful trade. This looks good for a turnaround. Very, very nice reaction off that level. This don't look too bad either. A nice, quick trade. It's just very low on liquidity normally.
All right, that's Bob Prince over at Bridgewater, co-CIO, speaking there at Davos. But I feel like it's something we need to
Ocean
talk
absolutely
about. We really
flew.
need to see some more pain in the labor market, Tim, in order for the Fed to get inflation under control and kind of rein everything in.
Yeah, and I don't like the idea of talking about people losing their jobs because for anyone who's ever experienced losing their job, it's just an awful process. But what we do know is that Federal Reserve Chair Jerome Powell, just a few months ago, called the labor market unsustainably hot. Yeah. And I think one concern many
If
people
we
have
continue
is
to
that
stick at this level, we could
inflation
potentially
is
break down.
certainly not going to go
At the
away.
moment, we're seeing some nice volume coming in actually.
Speaking on Bloomberg, I think he kind of echoed some of the comments that we just heard out of Bob Prince and this idea. And I just want to read the quote specifically because I thought it really summed it up. It said the equation is this: inflation doesn't come down until wages do. Wages don't come down until unemployment rises.
Seeing some nice
Unemployment
build up, so we
rises
could
until
potentially have a
wages
nice
do.
along for this breakout.
They got the unemployment rate up from what, 3.5%
So
to
we
almost
could push up
5%.
higher.
That's very difficult to do without going much above 4.5%. That is the big fear. And even as we get all this talk of maybe it's going to be a mild recession, I mean, that is the huge tail risk that the Fed overdoes it here. Well, and that's exactly it, right? I think there's a column out by our Bloomberg News team. Like, what if we get it wrong in terms of what we're thinking about how aggressive the Fed needs to be to get inflation down? Will inflation ultimately really come down, or there's a lot of questions I think still out there, and that's why we really don't know ultimately what kind of recession we could see.
And I think a big question that we still have to consider is the impact that these layoffs will have on
That
small
would be an
businesses.
insane
What kind of
move.
resiliency they have, and how are they able to weather a storm? Because oftentimes in situations
Probably
like this,
just
they
look
need
at taking
people
some
to
profit
step
there.
up the most. Yeah, absolutely. Well said. And it gets back to this idea of that softish landing, whether it can be done or not. And I mean, I was talking with Katie a little bit earlier. I give her a great analogy. Gary Strug in the 1990s. Oh yeah, I remember that. Thank you, Tim.
1996.
Yeah, I don't think Katie remembers
I have to
that.
bookmark it for later.
Okay. Well, it's. I mean, everything lives on the internet, Katie. You don't actually have to be alive to remember it.
That's true.
So there you go.
All right, guys, that's a wrap for now. We're going to continue our cross platform coverage. We'll be back in less than an hour's time. Radio, TV, YouTube, and Bloomberg Quick Take. We will count you down to the close beyond the bell. We'll be back at 4 p.m. Wall Street time.
And we continue our markets coverage right here on Bloomberg Television. Pleased to say, Bryce Doty is joining us right now as the senior portfolio manager over at Sit Investment Associates, which has about $15 billion in assets under management as we count down to the closing bells, just 15 minutes or so away. Bryce, we've been having a big conversation with a lot of our guests today about this idea of what's being priced into this market. The idea that maybe the bond market is pricing in a much too pessimistic scenario, and then you have an equity market that is maybe pricing in a much too optimistic scenario. Where do you stand?
Well, I think the markets are understandably offering mixed messages, and you definitely have people on all sides of the equation. So, on any given day, you're gonna get that perception of the bond market or the stock market being offsides one way or the other. And the reason for the complexity is that you now have a
This looks
slowing
good. Still
economy.
got gap.
You have inflation coming down quicker than people are expecting. And I think the reason for that is that they have this old school flawed way of thinking about what's driving the inflation. But as people are running out of savings, they become much more cost conscious, and companies are not able to pass through the prices that they used to. So there's a fear of margin compression. You don't want to be out of the stock market the day the Fed decides they're done because everyone knows it's going to be a pop. So that's propping up the stock market and giving it more of this optimistic feel that you just mentioned.
You right, Ismail? How you doing, UK? So, yeah, we've got a nice gap that needs filling. We are somewhat at resistance here, but this could be a very nice trade for that breakout. I mean, it's a pretty extreme move, but
That this whole wage inflation could cause exactly what you just mentioned to happen, where the Fed does a little bit of
ideally
extra
we just want it
tightening
to
and
pull
those
back a bit.
averages. I am not in that camp at all. Maybe I'm a contrarian, but what I see
Point 0.5
companies doing is, and we'll get
wouldn't be
confirmation on
too
this, but
bad to enter somewhere around there,
very, very low
even around
inflation,
here.
having a lot of savings on
Would be nice.
okay, shipping and all sorts of other things, and they're taking that savings and reallocating it to increasing wages without having to increase prices. So the wage increases are not
Yeah,
going to
we'll
be
keep it
enough
on the
to offset
pipeline,
this
KSM.
inflation spiral that Powell is so afraid of. And as a result, there will not need to be a reacceleration of of inflation and or the Fed to start raising rates again. By the May 4th meeting, we expect that the 3-month annualized CPI is going to look so low. It's going to be somewhere between 2 to 3% actually,
Wow.
while wage inflation is higher than that. But that is a normal state. It's normal for wages to outpace inflation. We had 18 months where there was negative real growth of inflation. That's the anomaly. The norm is for inflation to supersede or exceed CPI. And so once they see that, they're like, oh, hey, the wages aren't causing this sharp acceleration in CPI. I think then they'll feel calm enough to just pause for the rest of the year.
Then what does that mean for portfolio positioning then, Bryce? I mean, is this sort of the time to shine in fixed income, or is that trade already passed?
No, I definitely like bonds more than stocks
Yeah.
because if you're going to have margin compression on companies that are having to still pay higher wages but have lost all leverage at being able to pass through price increases as people have burned through their savings. That makes bonds look great. We think bonds could be 4 to 7% return this year between with most of it coming from yield, but you could get or should get a little bit of price appreciation because the peak in yields is over, and you're probably going to see yields come down a little bit, which will prop up bond prices.
And Bryce, just quickly, what type of bonds are we talking about? Investment grade, or are you looking out the risk spectrum a little bit?
It's a good question. So I mainly like investment grade bonds, even though I don't think there's going to be a wave of defaults in high yield bonds. The sentiment is going to get so negative out there that I'm not brave enough to step in front of that freight train. So I'm sticking with investment grade bonds right now.
All right, Bryce. Always great to catch up with you. Bryce Daly, Senior Portfolio Manager over at SID Investment Associates. Coming up a lot more. Coming up here as we count you down to the closing bell. Christina Hooper going to be stopping by, Chief Global Market Strategist over at Invesco. Plus, we're going to talk about Bitcoin, which is actually now close to its longest winning streak in about 10 years. And we're going to talk about what's behind this big move. And more importantly, is it sustainable? And we're going to have a conversation with Mary Lovely from the Peterson Institute for International Economics on what she expects for China's economy in 2023. All that more coming up in just a bit. This is Bloomberg.
Question is, are we able to get the breakout? So we're going to put this one all the way to the top, nice and close to the Vision. But yeah, let's see if we can get a breakout through here. Would be nice. Here goes Bitcoin. Start seeing some more supply coming in, and the buyers starting to lose some of that steam that they had on that huge move up. So let's see if we can continue. Potentially eyeing up another short on copper since we're up significantly. Saw some nice reaction. So we got in short And added some margin all the way up here. We got out just above. A bit unfortunate. Did look good to continue down. But yeah, commodities as a whole are up for today. Very, very up.
About 45 minutes until we get to these closing bells here. A little bit of a pause coming off 4 straight days of gains for the S&P 500. All your favorites are higher here on the day, but the weight of some of the big banks like Goldman Sachs as well as JP Morgan and a 2% drop in Amazon really starting to weigh on the market. Basically call it unchanged right now for the S&P 500. Your Dow is the big laggard on the day. The Nasdaq really trying to hold on to some semblance of gains here. Keep an eye on the FX space. Big Bank of Japan decision here. The yen, of course, now on a tear, having its best start to a year versus the dollar in quite some time here. And then risk assets all back in vogue now. Bitcoin rallying once again for a 14th straight day, back above 21,000, at least for now. Not quite sure what's driving it, but a lot of discussions, of course, will be had about risk sentiment. Risk sentiment amid the backdrop of the Fed raising rates, a lot of concerns about economic conditions and a market all trying to position around it. That brings us to our Options Insight segment, which we do every day at this time. And I'm pleased to say, joining us right now to talk a little bit more about this is our very own John Gagliardi, Regional Vice President over at Fidelity Investments. And John, I want to start off here with the idea of sort of what exactly is being priced in the options market, because I can see the general direction of things. I can kind of see the general sentiment. But of course, timing is always sort of the bugaboo as to whether you make money or lose money. What are you looking at?
We're looking at things like the S&P 500. We're right on the cusp of the 200-day moving average. This will be the fifth time we've gotten above the 200-day moving average, and maybe the fifth time will be the charm. But every other time, the last four attempts have been a fail, and we can always translate this into the options market.
And so, I mean, if it does fail, let's be optimistic first. If it actually breaks above it, if the fifth time is the charm, what does that signal? If it fails, what does that tell you about where we're headed next?
Yeah, that's also key. The S&P obviously is at its 200.
Effectively betting on the
So
short
look,
side. So if you're on the call side of the market, you're really betting that the trend is now going to change. After four attempts, the fifth one, this is it. The tough thing for buyers of options in general is they've got to get three things perfectly right. They've got to get direction, momentum, and time. And that's
so look if it's on the weekly that they're on about. No.
just perfectly right.
So here we go, daily.
John, Ben, that we've seen with whether you're talking about the VIX or some of the other volatility
So
here. How reliable are those indicators?
1, 2, 3, 4, and this is your fifth.
Necessarily reflect
So let's see if we can hold.
some people look, of course, at some of those shorter term
We could literally just plummet.
rather than the 30 days.
That would be so nice.
This is really tricky because this is a range-bound index. So you can see how it kind of trades at these highs. It gets up into the 30s and then it goes back down into the high teens. And really what we're looking at is if this trend were to change, you would see a breakdown of the VIX, and that would be just another one of your arrows in your quiver to say, all right, the trend has changed, and I have to change my whole worldview on this now. And just the same, if this were to do another epic fail where we cannot seem to get above the 200, you'll see the VIX go the opposite way, and we'll be retesting those 30s again. But you have to remember, with this chart, it's tricky because it's such a range-bound index that there really is no long-term up or down trend. It's always that kind of sideways, and you're playing the two sides.
And John, when you put this all together, the range-bound VIX, the fact that the S&P 500 is once again struggling at its 200-day moving average, what does that say about how much risk necessarily investors should have in their portfolio right now?
This is where investors really struggle, is they try to take what they know about the stock market and turn that into their option portfolio strategy. And really, it's about risk. If you know that you're buying an asset that can go to zero, and anybody who's ever bought an option will tell you, third Friday of the month, you could be looking at a zero in your portfolio. You want to keep that small. So as an example, if you had turned your risk, like let's say whatever your risk is in equities is X. If you said, okay, I turn that into, I'm willing to risk 1/5 of X, just as an example. Well, if you were a buyer of a call, the last four times that the S&P rallied to the 200.
Right, so we're 10 minutes out from that New York close now. So let's see if we can get some volume coming in.
On your 5th to 10th.
Potentially see a breakout, come back down.
And of course, the
I
person
mean, we failed. Seen some nice wicks on the top. So I'm starting to see that switch up.
the side that's a loser, unfortunately. So the rule is, starting out especially, keep it small, control your risk, because then you can always live to fight another day.
All right, John, we've got to leave it there. That is John Galliardi from Fidelity Investments joining us for Options Insight today. Much more coming up next. This is Bloomberg.
Down. See how it's reacting elsewhere. Not much.
And add another recession call to the pile from the global elite. Citi CEO Jane Fraser speaking earlier with Bloomberg's David Weston at the Bloomberg's Year Ahead event in Davos. Take a listen as to what she had to say.
What we are seeing is different countries are at very different places, so you actually cannot speak in generalities. We expect to see a rolling series of country recessions, but short of anything crazy happening geopolitically, and this time last year we wouldn't have predicted what happened in the Ukraine, you've seen the tails come in. So you've seen the over-optimism from some about soft landings and the economy's doing well, but equally you've seen the severe case downside also coming in. I think the general view in the States, certainly one we hold at Citi, is we expect to see a mild recession, largely driven by the painfully persistent service inflation. It's coming off, but it's still pretty high, and we do expect to see central banks continue tightening as a result. But the vulnerabilities that amplified previous recessions around the world are not present. Banks are in very good shape, consumer balance sheets are in good shape, corporate balance sheets are in good shape, and I think that omens well for a mild recessions when they come, rather than ones that we have to be worried about.
Do we know exactly the state of the economy? Because there's a lot more that is in private, behind closed walls, since the great financial crisis, because some of the regulations, a lot has moved out of banks like yours that are highly regulated.
Right, 5 minutes out.
Know the situation.
To the extent that anybody can be confident, we serve clients across the spectrum, not just those that are in the public markets, but the private asset space is a very important one. And we certainly see very healthy corporate balance sheets across the board. Our net credit losses from the commercial bank and from our corporate banking business in the last year. I've never seen them so low. And I think this omens well in our M&A activity, for example. The number of dialogues that we're having with CEOs about truly transformational M&A at the moment is enormous. It's not quite the pipeline it was last year, but it is a pipeline that, as prices have become more reasonable and corporate balance sheets are in good shape, that CEOs are thinking transformation much more than you might think, despite the fact that there's also an adjustment to the reality of more mild recessions ahead.
And the CEO of Citigroup there, Jane Fraser, speaking out in Davos, Switzerland, with our very own David Weston. And there was a lot of other interesting CEO commentary coming out of Davos. We actually heard a little bit earlier from the Credit Suisse chairman, Axel Lehmann, basically talking about it's been a horrifying year and banker bonuses are going to come down. And then we heard from the UBS CEO, and I thought this was interesting. He says they don't plan, Katie, any large-scale job cuts. In fact, they say they see a trend of being able to hire as other rivals fire bankers. Now, he didn't actually name those rivals, but two Swiss banks here with two, at least for right now, very divergent views of talent right now.
And to stick on UBS,
Yeah.
he said that they're hiring for what they're calling critical jobs, specifically in the Asia Pacific, in the Middle East. They absolutely have the momentum.
Yeah.
He says their global headcount is about 72,000 right now. It rose. It's at
Yeah.
the highest level since, I think, 2019 or so.
Yeah, and I just thought it was interesting because we talk about sort of the competition between these two, which is, obviously decades, centuries old, really, if you want to be precise about it. And the idea that, of course, one bank's misfortune can be, if you play it right, the other bank's fortune.
As in life, too.
As in life.
Yeah, a lot of lessons there.
You're wise. You're a wise one, aren't you?
Yeah, definitely.
This is Bloomberg.
All right, 3 minutes, 3 minutes, 3 minutes. We are seeing a nice push up, so let's see.
conviction either way when you look at the S&P 500. Same too if you look at the sectors. It looks like it's more tilted to the downside than maybe at 2 p.m. or so. You can see technology still on the lead, but only 0.4% higher. Real estate hanging on as well. You look at the bottom though, it's materials, it's industrials. Materials accelerating in terms of the losses, now down close to almost 1% or so remain.
All right, we talk about some of the individual movers. Actually seeing a little bit of strength here in the chip space. NVIDIA shares having a pretty good day, up about 5% here. And then I was taking a look at the interesting trade going on right now between Emerson Electric and National Instruments, obviously going in different directions here. There has been speculation now for months, really, that Emerson was making a bid for National Instruments. In fact, Bloomberg had actually reported a few months ago that that was the case. Emerson now publicly confirming that, a $7 billion bid on the table, which is actually higher than the bid that they had been rumored to have made all the way back in May here. And based on some of the commentary out of Emerson, it looks like they may be ready to actually press this a little bit harder. Not quite a hostile takeover just yet, but we'll see where this goes. Investors betting that a deal might get done. And keep an eye on United Airlines. We're actually going to get earnings out of United after the bell. They're down 0.6%. Remember, this stock is up like 36% just to start the year so far. Also to start the year, well, going in the opposite direction is the dollar. Weakness here has persisted now for several weeks. In fact, this is a downturn that really started late last year here. And it's a complete flip-flop from where we were a year ago when it was really all about dollar strength and how that fed into asset returns as well as asset risk and, of course, portfolio positioning. Now with the flip side, the persistent dollar weakness and a lot of calls right now on the street, Katie, that we could see additional weakness, particularly against the euro and particularly against some of those EM currencies that could change the risk profile pretty dramatically for what people chase.
All right, well, let's turn from, boring old regular currencies to crypto because Bitcoin, it's been on a tear this year. It's pushing above 21,000. It's flirting with its longest winning streak in nearly a decade. We're talking 13 or 14 straight days of gains here remain. It's up about 1% right now for 2022, or 2023 rather. I know we're only 17 days in. It's up almost 29%.
Yeah, and it doesn't really seem to be any real catalyst other than maybe, I guess, people are looking at the correlations with the Fed, obviously, and sort of the general idea of sort of what that means for economic conditions. And if the Fed is out of the way, then maybe you have a sense here that there is some safety, if you will, relative safety, if you will, in some of the riskier assets, the speculative assets.
Yeah, I mean, if stocks...
Because nobody's making their use case for this again, are they?
No, I haven't yet. Give it another 20,000 or so, and then people will talk about that again. I haven't heard that, though, but what I have heard is, again, this is a macro asset. If people are pricing in, rather, the fact that the Fed maybe is going to pivot here, you would expect Bitcoin to sort of be a leveraged bet on that. But what's interesting, if you look at the technicals, and Bitcoin really has not much else to trade on, you look at the 14-day RSI, it's the most oversold since the start of 2021. It's at a 90 right now. If you get above a 70, you're oversold. So it's quite oversold at this point.
Okay, overbought?
Overbought. That's
Overbought.
exactly
Okay, yeah, you were confusing
It's
me there.
difficult because if you look on the terminal, it's red.
You have to flip the terminal upside down.
Yeah, no, you're right. I'm working on that
There
one.
you go. All right, I think we have Hannah Miller on the phone, very own here, Bloomberg news reporter, has been covering all this. Joining us, there's Hannah. Hannah, I mean, this is a technical story. Is it a macro story? I mean, what's behind this?
Yeah, so I think macro investors are starting to feel more comfortable investing in Bitcoin again. I mean, this streak has been pretty impressive, and it's welcome news for the industry. The fact that Bitcoin is above $21,000 right now, crypto investors are feeling good about things.
How sustainable is this, though? Because, again, you stack this up, and this is sort of the tension here, that the headlines about what's actually going on in the crypto industry, some of the companies in the space, it doesn't seem like the needle has moved much in terms of good news on that front. Hannah, what is the sort of the latest in terms of the sentiment in the crypto industry?
Well, we have seen things quiet down since FTX filed for bankruptcy, and obviously there's more developments to come with that. So, that could always shake things up and bring more volatility to crypto prices. But right now, I think investors are feeling good about 2023 and are hoping that Bitcoin bottomed and that we're only going to go up from here.
I am curious. We were talking a little bit earlier, Hannah, about a story that Joanna Ossinger wrote with the discussion with Brett Harrison and these ideas that Anthony Scaramucci.
Right. Yeah. Let's see if we can get anything. We'll keep you guys updated on any movements as usual. But yeah, I mean, it's pretty sluggish right now, so it's probably going to be a little bit deeper into this evening or tonight. Yeah, those that joined us, thank you very much for joining. We'll bring out another market update tomorrow morning as well as a live stream. So we'll see where we kind of left off, and then go from there. But yeah, today's been a good day in terms of trading. Decent amount of profitable trades. We're up for the day, so that's all that matters. But yeah, thank you very much, and enjoy the rest of your evening, and we'll see you tomorrow for an update and a couple of live streams. Cheers.